Hi, my name is Kim Watson. Good evening. Welcome to a webinar which I'm doing for XTB, which is the titled High Volatility in the Oil Market. I should give you a little bit of background. I've been trading oil over the years. In fact, in 2003, I started doing some analysis on the oil markets. I used to write for a newsletter at that time, or write a newsletter at the time of a business partner, and during writing that, I decided to do a complete research document on US stocks that were involved in oil. So I did a complete analysis of the oil markets back then, to say about 2003. Since then, I've been trading predominantly currencies, but in the more recent past, when we always keep an eye on the price of oil, but I've been looking at oil much more, and many of it, I run a live trading room, virtual, it's an online trading room, which we get a lot of clients asking us about oil. So I've been literally talking about oil more and more, and I do a morning outlook, and I've been covering oil off a lot more. But what I realized is a lot of people just do not understand much about oil. It's as they say, there's nothing gets traders more excited than volatility in the headlines, and there's been a lot of volatility in oil recently, lots and lots of headlines. It's really sort of grabbing the financial headlines time and time again, as we saw some sort of record lows in the price of oil recently. Now, with such a thing as oil, of course, there's always that risk that people don't want to be left out, and that they see that oil prices moving, and they just really don't want to miss the opportunity because it's been so low. Surely it must go up really high again. Well, we'll see. Now, most traders that have been enticed overall into oil recently, last few months, know, as I say, very little about the markets, and that there's a lot of them come a cropper because of certain changes. The contracts change, and it throws them completely. They don't understand what's happening to the price of their contract that they've got open with their broker. So it's there's lots and lots of questions out there, as I said before. There's obviously there's a desire with traders to be wanting to buy cheaply, and you know, $15. I must admit, at around about $20, I was started looking and thinking, this is not a bad buy at this level, and I did actually pop a trade in there myself. I was thinking, well, perhaps it'll sort itself out a little bit, with the potential of pushing up towards $30, $40 a barrel. It's quite good I was doing this webinar, but it was quite good that my mind is quite inquisitive, and I will research the market out. And I started doing more and more research and realizing, well, actually, there's time to wait, and I'll give you the reasoning why you should be waiting as we go through this webinar. As I said, many traders are being caught out when the contracts are changing. I'll show you some examples and explain what contracts are, oil contracts are, etc., as we run through this webinar. And in terms of what they're actually trading, again, they don't understand. It's just oil. Oil's oil, isn't it? It's all black and sticky. Well, not quite. Okay. So what I'm going to do here is really discuss the current situation we're in here. I mean, there are times when you just cannot give oil away, and it seems that recently it was the case. There's so much production slopping around out there that traders actually paid not to take delivery of the most recent contract, and they paid up to $37. So they effectively, as opposed to taking delivery of oil, they said, we don't want it, we'll pay you to keep it. So that's what happened. So it gave us the first negative price ever on the Chicago CBE. It's become a massive storage headache overall. I'm not sure if people understand, but I'll go through the background. Oil is, most countries keep a stock of oil, and they have to keep stocks of oil. Now in the US, if you follow through on a Wednesday afternoon, round about 3:30-ish time, 3:30, you'll get the storage of the US oil. you'll get the storage figures. Now, of late, well, up until lately, no one's taken a lot of notice of them. There were stages when oil becomes in great demand, and people will look at those numbers, and if the old supplies, or sorry, the oil stocks are dropping, it will push the price up, and it gives quite a push to, it was giving quite a push to the price of oil. Now, more recently, we've gone into this situation where, not just this year since the coronavirus, but before then, that the producers were producing far too much oil relative to the average daily need. So we've got into this stage, this position where people are starting stocking more and more oil, but people have sort of ignored it a little bit. And then, of course, come January, February time, March time, with the situation in China, and China is a major importer, and it's a net importer. It produces only about 4.82 million barrels per day. It uses 12.79 million barrels a day. So it's imported. It's the biggest importer, and of the growth of oil usage, China represents about 80% of that growth since about 2003. So it's a massive user of oil and net importer. Now, the storage headache, of course, is pushed on because countries such as the US have started. I mean, the US used to be, when I looked at it originally, they were a bit of a part player. They produced oil, but they've become, over the years up until now, they are the biggest producer of oil in the world. They represent 18% of oil that's produced. The Saudis are in second place with something like 12%, Russia 11%, Canadians 5%, China 5%. But as I said, China is a net importer, so they have to import oil from around the world. Now, all of that oil, the idea was countries like America didn't want to be caught out by the wars that had happened before, way back in the 70s, there was a situation where oil was stopped, and it really pushed oil prices up everywhere, and they didn't want this repeating. Now, America has spent a lot of time producing and working on the technology behind shale oil. So they're actually literally pumping water down, pushing oil out effectively of the ground. The sort of quantities people wouldn't have dreamed of before being available, but because of the price levels that have been pushed up to the $60, $70, we saw it over $100 a barrel. We've seen all these this push and make more and more exploration possible. But the Americans have basically decided they didn't want to be held over a barrel, literally, by other oil producers, and hence they pushed and pushed. It wasn't many years ago, actually, that the Saudis were trying to push the price of oil down so that the Americans wouldn't bother investing in their own exploration, etc. But that didn't work out, and as I say, the Americans are now the biggest producer of oil. So it's a massive storage problem. The Americans have got they got stocks, and they're just literally nowhere to really put it. The Saudis have actually they push so much oil out there. They've actually using something like 1 in 8 super tankers is actually being used to store oil, which they haven't even sold. So these super tankers, there's lots of super tankers full, but there's a lot full that haven't actually been, the oil inside has not been sold. It's just been used as storage. So a little bit background on what you're actually trading. If you're trading with XTB, what they're using is futures, they're using CFDs of the futures market. So it's based on the futures pricing. Now, futures pricing was started many years ago, and it gave oil companies the opportunity to sell oil that they haven't actually pumped at that time, so they could raise money for the exploration, etc. So it gives them the opportunity to raise money, but it also gave the buyer the opportunity to know that in 3 months, 6 months, 12 months, or even longer, they would be getting oil at a known price, which, depending on the business that you're in, is very key. Now, I mean, these future markets work right across the board. It's not just oil, but oil was a very important thing. It fluctuates in price. If you're an airline company, you want to make sure you've got kerosene in there, and it's at a known price, because you don't want the unexpected to come in too much. So you can buy futures contracts well out into the future, and you'll know what your price is going to be. It sometimes may be cheaper on the spot market, in which case they will buy off the spot market. So of course I've mentioned the word spot market. The spot markets, there is quite an amount of oil sold on spot markets, but the focus and what we're focused on here really is that futures market. There are other funds, such as United States Oil Fund, or USO as it's known. It's an exchange traded fund. They're massive in terms of size. It's got bigger and bigger as institutional investors want to touch into oil but don't really want to buy the futures themselves, so they buy into a fund that does that dealing. Individual retail traders may also buy into that particular fund. Now, that fund's having a hell of a time at the moment, and it costing them dearly recently in terms of trying to offload the futures contracts that they had. Now, before we go on too far, just to explain that oil's price is not completely straightforward, but the way we trade it is, and that's the good news. The different types of oil from different countries, like the Alberta sand oil that we get from Canada, is a very low quality. It trades at about $10 a barrel normally, something like that, $10 or $12 a barrel. It costs $70 or $80 a barrel to produce. At the moment, that you can imagine it's a case of a no-brainer not being able to do too much with that. But there's plenty of other oil out there, which the lower qualities oil is much cheaper. But in the wisdom of trading, there's like this benchmark of the Western Texas oil, which is what we use, and you'll find on XTB, and of course Brent oil, of course, and that again, that's listed on the under the commodity side there on XTB. So you can trade both of these. Now, West Texas is by far the largest, and it's also really volatile. Brent slightly less volatile. There's less Brent anyway, but also the price that's based on Brent, it's less, as I say, much less volatile, and storage isn't the same sort of problem as we're seeing in the US, etc. Now, there are other prices quoted for oil, and if you really dig around, you can find all sorts of different sources at different prices. But as I said, for retail traders and what we're dealing with, generally you're looking at West Texas. Okay. So what I wanted to show you is the futures. Now, this is literally taken from their site here, the CME, and it shows here, if I can show you my cursor here, the May contract. Now, the May contract actually settles in April, but the deliveries to the people that have bought it occur from the 1st of May, so that's why it's called the May contract. If you're with XTB currently, you'll find that you're trading the July contract. It's not absolutely clear on the site, but I checked with this. It is 2 months away, or I say 2 months. The front month now is the June contract, which is being traded more openly. It's the lower price contract. I'll show you the prices in a minute. But the July contract is what's actually being traded at the moment. But as you can see, all of these, I'll just explain it very briefly here. You have the month, contract month. The code there, CLM, is the June. You'll have the first trade when it could first be traded. You see it back in 2011. You could have started trading this contract. You probably wouldn't have wanted to be buying it in 2011, or if you did, you'd probably be out of pocket at the moment, because oil was still sitting around in 2011 much higher than where it is at the moment. But you could have been trading this contract from 2011 right the way through. So it's a 9-year, just a bit less than 9 years there, span of the time on this particular contract was available to be traded. So, and the expiry date, the settlement date effectively was the 19th of May. And this is when we saw the price, sorry, I'm looking at this current one, the 21st of April rather. The 21st of April was the date that we saw oil go to a negative figure. In fact, it started going down before the 21st of April actually, but I believe on the 21st of April it actually went negative. It was either 20th or 21st, but the settlement is on that day. Now, other things here. First delivery. This is actually if you're buying oil to actually keep the oil and take delivery of it, these are the actual deliveries. We think of just trading oil because we're just trading oil. It's a bit like trading currencies or trading the equity markets or anything like this. We're never intending taking delivery of it. Well, of course, you wouldn't be anyway. You're trading a CFD as opposed to actual contracts, but they, as I say, they are based on the contract prices. So what we've got here is the first and last delivery date. So that's one that's just been settled 21st of April. They'll be delivered between the 1st of May and the 31st of May. That would be the contracted period for those that oil that's been sold. Okay, so what happens then, so each of these contracts are out there on the markets or whatever, but as I said, you'll find that mostly you'll be just trading whatever your broker's offering you. If it's XTB, you're trading this July 2020. Now, I'll just give you a look at this was taken 2 days ago, so the prices are slightly different. But those contracts then, this is just a screenshot of those contracts. You can see the June contract there was at that time trading at $12. Now we saw it pitch down. I'll come back to that in a moment. I know some of you are probably asking that question. Why did it pitch down last week then after the new contract started? We're seeing it at $12 there at the moment. Well, it was $12, and then the July contract. This is the one you would have been trading on XTB. Was sitting there nearly $18, just short of $18. Pushed up a bit at the moment, I believe. August contract sitting at $21, and you can see here there's an expectation amongst traders that come December 2020. There's almost like an expectation that oil price would be sitting around that $27.45 at the that's sort of there. So that would be almost like an that's what you could at this moment ensure that you're getting oil deliveries. If you buy those contracts, if you were buying those contracts at this stage, you would be delivered oil at $27.45. So people could actually be buying this at this stage, and that's where it is at the moment. So it's not even as high as $30 by December. So you see, it's a slower process than some may think it would be. But that's not to say things may change. Okay, now I just thought I'd show you the chart. So one thing I really liked at what XTB did here is they changed the contract before it expires. Now I know some people got absolutely caned by their broker that they literally they were sitting in the contract which they thought was in the contract, and then it just dived straight away. They didn't know too much about what was happening. A couple of traders I know got caught in that. It came up to expiry, it went to nothing, and then went negative. And they lost money on it, of course. Whereas the good thing on the 16th, so before the actual expiry day, XTB changed their prices and they notified people. As I said, sorry, on the 16th, I think they notified people, or it occurred on the 16th, but they gave plenty of notice that your price would be switching to the next contract, and then they pushed it through to the July contract. So their price literally went from what the May contract was going to the July contract at that time. Well, you can see the July contract when I took this shot yesterday, it was sitting about $18 at that point. So it's actually moved down. Now, some people noticed this and asked, well, why did it dip again so much down towards $6? And this was where USO, the big exchange traded fund company, where they literally started closing and getting rid of their near-term contract oil. And it had a knock-on effect on all of the oil prices. This bounced back quite quickly. I mean, it was a bargain down here for those that jumped into it, but it happened so quickly. It was a very quick retracement there. In reality, this is a 4-hour chart, but all the same, it was a very quick. I was watching it. It bounced very, very quickly. But this is what happens often when you switch in across from the future contracts. So you can be aware of this. You don't suddenly gain $6. By the way, your price is effectively carried across there, and it's adjusted accordingly. So you effectively still, whatever it's been adjusted to, your plus and minus what that is. So if your stop originally was down here, you would need to move your stop to the sort of same distance to the new price. So it ensures that where if something like this happens, that you're not caught in the midst of things. So there we are. That's what the oil price looked like on there. Let me just get rid of this tool here if I can. Go back to the mouse. There we go. Okay, let's just get rid of that. Clear all drawings. There we go. Okay. Getting back to the important parts here is supply's been outstripping demand for some time. There is a lot of action being going out there. People have been pumping, say, much more oil. The US, it's all the shale oil and etc. They've become self-sufficient and almost willing to go out to the market with it. I think the law was changed a few years ago now, where they could actually start selling oil. There was a law in before then that the US couldn't sell their own oil. It had to be kept for their own use. Okay, as I said, the US has become the biggest producer now, and it's relatively modest price, so they can afford to push it out there. The technology's made things a lot easier. OPEC and other producers, it's the OPEC Plus group, as well as it's referred to, have failed to agree on production cuts. So they've really made it difficult for themselves, because everyone needs the money effectively. You think it's quite a simple process in some respects, but a lot of these countries rely heavily on their oil production for as part of their GDP. In fact, I just made some notes this afternoon. If you look at the effect on the world economy of all of this going on, and it's a lot of people probably think, well, cheap oil is great, but unfortunately it's not great. One, it'll push inflation down, and it puts more, it means interest rates remain lower, which is good as a consumer, I guess, for a lot of things, but it's not necessarily good for economies which are looking for inflation to be running around 2%. It makes it quite difficult when such an important thing as fuel reduces in price. But it's the massive shortfall in revenue. I've made some notes here. I worked out the US is around about $600 million a day shortfall. Now oil accounts for around about 8% of their GDP, so it's a significant amount, but you would say it's not a major amount, but it's still a significant amount. That's around about 219 billion a year it'll be short in terms of on the price alone. This is excluding changing production. So there's a massive shortfall in somewhere like the United States. But then I looked at Saudi, and I think it's really important that you look at countries like Saudi and countries that or states that that really are more dependent on oil. And Saudi, that their oil is 42% of GDP. And they're going to be down something like 144 billion over that time. They're going to be short 144 billion, which that's a significant chunk out of the GDP. Now, well, oops, let's just go back one. Saudi actually caused some of this problem, and you look at all of the things that actually went on with supply. And Saudi, Saudi would not. Well, I say they proposed that cuts of something like 500 million or something like that barrels a day. Sorry, 550 million barrels a day would be made by the other producers, and the OPEC would themselves would cut around about 1 million. Now that just wasn't agreed by the Russians, and at that point the Saudis decided to go for a war effectively, and said they'd flood the world oil market on the 6th of March, and that pushed the price down strongly. If you look at any chart around about 6th of March, you'll see oil just dropped because not only did they start flooding the market with extra production, but they also cut the rates quite significantly to gain more market share. So it's been a real case of the Saudis sort of deciding that they would show who's the boss, but it may not be the Saudis that end up as the boss out of all of this, as I'll come on to in a moment. Of course, the other key factor in all of this is that the COVID-19 coronavirus is absolutely the key to reduction in demand. Normally, the world would be taking in 100 million barrels a day. They've actually, this has been dropped by about, the usage has been dropped by about 30 million barrels per day. That's probably quite a modest drop compared to where it was. So it's quite a significant difference in terms of what we used to. So that 30 million barrels per day, which we've been overproducing anyway, has got to go somewhere. So you can see, so markets are all about supply and demand. Well, the demand's dropped by 30 million at the moment. It may start growing, and hopefully as the world starts getting back to its feet, that 30 million will gradually diminish. However, 30 million barrels per day has got to go somewhere. And again, I looked at sort of storage wise, and I talked about storage a while ago, and they're using old salt mines to store oil in, which seems a bit of a strange thing. You take it out in the ground and you put it back, but these salt mines apparently in the Gulf of Mexico are particularly good at storing, and they can store 10 million barrels of oil in each of these average caverns. However, it's only 10 million. That's about a third of the surplus per day could go into one of these, but they're filling up quickly. As I've already said, in terms of demand, there's super tankers, and I should imagine, as I said, there's around about 1 in 8 of the super tankers out there that's full of oil going nowhere. It's just parked up. That will probably eventually just block and block and block. So demand may come back, but there's lots of factors, other things affecting the price of oil in terms of demand. And as I said, there's these massive traders. They fund their cutting its positions in the near-term contracts. So we could see oil prices dropping in the near term once again, and particularly as we run into this next contract expiry. Okay. Okay, I was just having a read through. Now, one thing I would say, if you've got questions, do pop them up there. We've got a bit of a lag in terms of me speaking and the questions coming through. So do bear with me a little bit, because some of your questions may be coming through, and I'll see them a little bit later. Haynes, in terms of how much oil would be at the end of the year, I'll come back to that chart later, and we can discuss it. But goodness, nobody actually knows. That's the whole thing here. What I'm actually saying here is there's significantly more supply than there is demand, and the difference, there's not the position to there's nowhere to put it, basically, or there's becoming very few places to actually put it. Looking forward, I thought I'd sort of try and be a bit more positive about the outlook on all of this. Looking forward, many oil states, as I said earlier, rely heavily on the price of oil. So there will be a desire to cut and make more reductions. We've seen a recent reduction already made, but it's just taking so long to actually hit the market effectively. It will take time for this big reduction to have a clear move onto the markets, I believe. Okay, people can be very optimistic about it right now, but as I've said to the traders that I'm working with during the week here, last Friday, they were quite keen to get in. I said, well, you know, it might be a good time, but you've got to be really careful. If you're day trading it and you're running it over a very short period, well, you could be trading it back up and down like a yo-yo. But I would say, remember, you can short it as well. You don't have to just be on the long side. There's so many people just wanting to be buying it because they see it's the deal of the century. It's, beware, is what I'm saying. At the current levels, we've got to see, I mean, in the US, there's something like 260 rigs that have been stopped drilling over the past 5 weeks. So there's a lot of people starting to cut back. It's just because they've got nowhere to put the oil as much as anything else. And of course, the oil price itself is certainly not helping things. So we've worked into this perfect storm of what's going on. I mentioned a moment ago the Saudis' actions there. Now, this may have backfired, and it's going to be interesting how this works out. The US still use, although they've got their net, they're self-sufficient in oil. I mentioned earlier on that there's different types of oil, and the oil that the Saudis produce makes good diesel. So the US still import quite a lot of oil from Saudi because it produces the right, it's the right type of crude for that particular job. However, the Saudis have pretty much upset people, and I don't know if Trump's the one to upset here. It might backfire because there's a paper in the US that's already been passed one house and is sitting in the upper house called NOPEC. You've obviously heard of OPEC, but NOPEC is literally the decision that may go to and be put forward where OPEC becomes illegal effectively, because they're literally setting the price of oil, and doing such is seen as not allowed in most other things. So why should it be allowed to be happening in oil? Now, to be fair, the Americans have probably quite liked it to some degree because they've had quite a lot of power over it in their past. But not having it there anymore, it's a bit of a double-edged sword. But so, as I say, Saudi are in a very precarious position at this stage, having caused probably even more of a problem by not only reducing prices but pumping out much more oil into a market that really couldn't take it. So I don't think the wars and the problems are finalized quite yet. That's what I'm saying in terms of it could be a while. Now, looking forward again, something to look forward here. We've got to look out for this unwinding of the June volumes. I'm going to come forward to it in a moment, but I'll show you the June volumes. There's some huge volume that's sitting there in June. This has got to be unwound. I'm not too sure whether this, and the June volumes, the settlement day for those June contracts is the 19th of May. So as we move towards that date, we could see prices falling. Now, if all of a sudden everyone gets particularly bullish and because of markets opening up again, etc., well, it may get lost somewhere. But personally, if I was looking for a time to be going on a more long-term position, it probably wouldn't be until those massive contracts are unwound effectively. Now, a warning that we can see in the market so often is not necessarily what's happening in the markets at that time. It's what brokers do to protect their clients and ensure that they can keep positions running or doing what they're doing. I know a number of brokers, and I get contact, I keep in touch with them regularly, and just as XTB have done, I mean, they move their contracts regularly, and they keep you in that point of enough volatility, but not so much to destroy your accounts, which is a great point of where they sit. But some brokers are actually looking at effectively indexing the price of oil. So they're starting at a base of 100 and then adding the current price to it. And when brokers start taking this sort of action, the reason they're indexing it is because they believe there's a potential for price to drop below the zero again. And well, if traders want to take advantage of that or be taken advantage, I don't know which way around it would be, but you've got to note that when brokers are doing that, it may be just safety, whatever it is, other people are concerned about these markets. We will still have the OPEC plus meetings. They will still come and they could affect things with more cuts, if more cuts are made, but we need some significant cuts to be made across the world in terms of production until some of these tankers that are starting to get filled and not used, otherwise they won't be being able to be moved. Asked there in terms of what is the consequences if OPEC goes ahead. Well, put it this way, Saudi could become a very small player in the world in terms of what it's done, because the process would be to effectively make all trading in oil in dollars, and in particularly any money that's held by the Saudis, will be frozen in the US. I mean, we know the Americans can be quite sharp on these sort of things, and they would freeze their money. So it could have a massive effect. I think it was probably one of the worst hands of poker any country's ever played at a particular time, which where you see the sort of things the US would do to prevent action against their own businesses, and someone's basically done that. Now they did it previously when before the shale oil was really produced in quite vast quantity, or as big quantities as it is at the moment. They kept trying to keep the price down. The Saudis and the OPEC group didn't really work. The technology, the price still came through, so they lost that one. But this could be the biggest mistake they made. It may be that it's overlooked for other concessions. We'll see. They're powerful people, of course, still. Money talks, and God knows what goes on behind the scenes there, but it was overlooked up until now. If OPEC happens, as I say, I think if their assets are frozen in the US, they could be frozen out. Of course, if that was to go ahead, then the price of oil at that stage may start increasing significantly. So we'll see. But the US do not want massively high-priced oil either. There's this sort of one thing when people are looking for oil. If there's this optimum of around that $50 a barrel that I think most people agree with. When it gets beyond that, it becomes a bit of a beast, and it's very inflationary, of course. When it goes much lower than that, of course, companies or countries that companies more so that are producing this oil, if their production costs are high, it just doesn't break even. These, as I say, these oil states, they need oil revenue. They may as well they should have taken their revenue on lower volumes as opposed to try to keep on pushing the oil. But there we are. Okay. Okay, John, in terms of if you're in a negative position at the end of the contract, are you effectively booking that loss? It depends on the particular broker how that happens. I think, I would be strongly recommending that you're sitting there with stops on these on your price action. If you're trading, I mean, you won't be trading that June contract, but it will have a knock-on effect, I would have thought, on the July contract that you are trading if you're trading with XTB. So if you're trading July contracts, you're going to be safer. I'd be surprised if it went negative, but it could go low again, possibly. It may be that the powers that be hold things up here. It's a funny old market, the oil market. It's a little bit like gold. There's so much manipulation out there in the gold market, which may be a source of another webinar, but there's so much manipulation. We may see this manipulated accordingly. But generally, as I say, with some of the brokers I've been talking to, they're literally, I mean, you're just in effectively a rolling position, which is readjusted. With the broker I mentioned, where they're using an index process, if you didn't have a stop on it, you would be still in a negative position. you wouldn't be closed out. But unless it's hitting, you don't margin calls and things like this. The great thing about oil is margin's not too high, which keeps people from often trying to overtrade it. But there we are. Okay. One thing I watch out for, and I would strongly recommend, if you're looking at oil prices, you go forward, look at the US crude oil inventories. They come out, as I say, on a Wednesday afternoon there. It will give us a bit of an idea of where things are going. They improved slightly this last week, this week they improved slightly. They were not quite as high as expected. However, they do fluctuate, so it's more of an average figure. You've got to be looking over on that basis. It might give you an idea of how things are going. Sorry, I haven't forwarded these up here. So the important things to be watching out for then. Watch out around May the 19th when the June contracts expire. It's a settlement day. As I said, the brokers are taking action here. And the other thing is watch out for the crude oil inventories. I'm sure that you'll find them released on XTB's news service. Okay, so I just wanted to come back to this as I'm sort of moving towards the end here. In terms of the question, of course, I get asked here is where will oil be in December? Where's it going? I think some common sense may come to these markets. However, whatever happens, because the producers cannot and will not want to be selling oil. They will not want to be selling oil at $17 or $12 a barrel. It's just no logic to them at all. So these prices is not where they want to, but we've got to see. And I mean, I think there was a 10 million barrels per day cut was the more recent one. But if there's a $30 million that's only looked at $20 million barrels per day still as a overproduction at this stage. Okay, that will gradually get caught up on, but there's this lag in the markets. So I'm just trying to get a pen here so I can draw. So when you're looking at this, then, as I say, be careful. This June contract, it'll be expiring. The date I gave you there, 19th of May, that June contract. So watch out for that, because it's not quite as low as that at the moment. I don't believe. He says, as I just switch on the World Trade. Sorry, I've got it on a different chart. It's just a different screen, different computer. It's sitting at $18 at the moment, so certainly not that low, but certainly come up a bit. But where will it be? Personally, I'm just using a bit of a common sense approach to what may happen. And as I say, it's my personal feelings on this. It may push towards the $30 barrel towards the end of the year there. And it's, to me, if you're going to do something like this, it almost becomes like a position trade. Depends on what you're trying to do. If you're trying to day trade and catch every move up and move down, there's methods you can use to do that, of course, but you've got to be careful with your stops there. But if you're looking at oil as a trade over a longer period, well, you take it more of a position trade. You will, if it depending on the broker you're using, be adjusted in terms of the contracts, be expecting to take some charges or some movement as we switch from July to September, for example. There'll be an adjustment in price levels there. So just be aware that it might be artificially higher on your chart than it actually is in real profit to you. Okay, so that's basically what I had in store for you here tonight. At this stage, let me just clear all the drawings. There we go, off there. But you can see it's as I said, coming back to it, it's a common sense approach that's needed here with the producers, because if they're overproducing by such a significant amount, it's not good for their own economies, any of them, because that they'd be better off leaving it in the ground than what they're actually doing. And I know they've got costs, but their costs are probably the Saudis have the least costs. They have something like $1.50 or something, or $2 to actually pump it. But then there's just a bit of transportation, etc. Their costs are significantly lower than most others. However, all these countries at the end of the day have costs, and they have, as I said, that the price of oil has such a significance, and particularly Saudi and other oil producers that are towards the top end of that list. 42% of the GDP in Saudi, they've got to do something if they really want to get back to the levels. Yes, they might sell less of it, but it's producing a structure in the market, and I think that's what will actually come through. Okay. How do we know which month the contract is the CFD is pegged to? I actually asked. It isn't. The details are not on the ticket, and perhaps I'll speak to Evelina and see if they can pop that on there for you, so you understand what it's relative to. But I believe it's like effectively two months ahead of current. It's to keep. It's a balance for a broker, to be fair. If they give you the current, it's too volatile for most people, and you'll just get your accounts chopped up. But if you're going a couple of months ahead, it gives enough balance for those people that want to trade it more on the short term, because there's some great. I mean, it's quite ironic. I was actually looking at some really good analysis of trading oil recently on a just during the sort of timer from about 2:30 or 2 o'clock onwards in the afternoons, and it was coming out with some really good, just a little setup that I've been using for years on other markets. It was coming up with some really good figures, and of course this all happened. So I've yet to retest it, but it is a market that anyway, which is quite interesting. But I do recommend that you understand what you're trading. Unfortunately, as I've told my traders off in our trading room for training, if they don't know what they're doing, the questions all should be asked effectively. But I think with a lot of these things, we all rush in. We want to be part of it. It's that sort of human nature to be trading what's being talked about, isn't it? So, and not being missed out. But it's always worrying. I mean, it's normally worrying because if you're traveling around in normal circumstances, you get in a taxi and the taxi driver starts talking to you about something, a bit like Bitcoin. As soon as the taxi driver started talking about Bitcoin, you think, well, it's about time I sold this, or whatever it may be. Yeah, there used to be other stocks and that I used to look at. It used to be quite funny with the local barman starts talking about a stock, and you think, it's about time we closed out. Everyone knows about it. John, are you looking for me to share the info, the testing I was doing on the oil price? Yeah, I think it will struggle to break $30 this year, but we'll see. As I say, I think you've got to, if you're looking as a longer term trader, if you get in a good dip in price, you could hold it and do quite well with your money. Is it a good time to short oil? I think, do you know, Action 9, I tend to look at the markets technically in terms of timing a lot more, but with the fundamentals that have been going on with this market, it's quite difficult because there's I think it's one of those things that you build in with risk. There's so many things affecting the world at the moment that's made trading more volatile, more fun at times, more. But at the same time, if you experience in trading currencies, you'll find at times you're just getting, it's a switchback and everything else. So these markets have changed a little bit here, but I think if it's technically showing up as short, you start looking at the short side. And that was in fact what I said in the first place. You know, if you see opportunities, okay, fundamentally we know that there may be a dip in the price as we move forward a little bit because of the next settlement towards the 19th of May. I'd be watching that quite carefully. Oh, what I was going to show you here, actually, if you notice the amount of June contracts there's nearly 600,000 June contracts, and that was what I was really watching. I was going to I need to keep an eye on that. You can go onto the CME site and actually look at oil futures there and just see how that's dropping. It sits there. As I say, let me just bring the pen around here so you can see it again. Look, if you look on the site there, you can see that, look, there's 600,000 yeah, 600,000 contracts sitting there at the moment. It's that's a lot of contracts sitting there relative to what there is. November, look, 9,000. But this is what you sort of expect. You expect a push up towards the winter months. It's not quite surprising, but you can just see, look, I mean, it's quite thin down here relatively, but okay, there's some decent numbers here, but that will pick up. It's a natural thing that the near term contracts always have the higher price volumes rather. I can't answer that in terms of stop taking position from your clients if price went negative. Well, the XTB contract didn't go negative. Well, I will answer that because it didn't actually go negative. It only went down. I mean, when it did hit, it ran down about $5 or $6. So because of, as I said, I think they actually took a very good stance of actually moving it earlier, and it kept people safer. What strategies would I recommend for day trading? I trade strategies. I use very technical, very simple, technically based strategies. Camille, it's probably not the right time now to sort of discuss for those in terms of strategies, but very simple basis. I tend to look at price action. The price is king, and I'll read the price action, make decisions from there. If it's trending, whatever it's trending at the time. I'm not trying to be over clever with this market. That's the other thing is, you know, there's so many people that have got an opinion in these markets, and they try and be overly clever. I've got a fundamental background to this, and I've got that in the back of my mind, and I'll use that. But if this market's rallying and I'm I'll play it upside for a while if I'm day trading it. But I'm looking at the technical. So if you're getting higher highs, higher lows, and it's, you know, give me a nice retrace into some support, I'll be a buyer, and you know, target it in that way. But just as if I start seeing it cutting across the other way, at the moment I'm just looking at a 30-minute chart here, and it's been running up quite nicely there. It's got high, just as I said, it's got higher lows, higher highs. It just recently pulled back to a 30-minute 50. You know, that's the time with your day trading sort of things that you would look out for potentially and buy into. So very simple strategies, Camille. If you look me up, we are having 2 days in our trading room soon, so you could always come and join us free for a couple of days. Okay, Brent or WT Western Texas. The Brent has lower volatility in general. Depends on what you're trying to do. You will. If you open it now, it will still be rolled over your position, so you'll have to readjust. If price jumps on that next contract considerably, you'll have to make your adjustments, Harry. But you could just hold it there. You just need to adjust it. But yeah, personally, I think in a sense it's where the volume is that appeals to me, in a sense that Western Texas. But you could actually say, well, have a look at Brent. Brent's obviously at different price levels, and you'd have to make your own assumptions. Brent obviously runs up at a higher price, but there's a lot less of what comes classed in that Brent number. Why has in the last couple of hours, I don't understand why it's 2K. It's okay, $20. It's getting close to. It depends which contract you're looking at. But we just say it's just seen that, as I say, why has it bounced? It's just come back to a key moving average. It's probably why there's technical buyers out there. So there's people coming into the market. You're welcome, Brendan. So if there's any other questions, I'm quite happy to sit here for another 5 minutes or so, or 10 minutes, whatever the questions there, if I can answer your questions, of course. Always does something about 1930. Yeah, I mean, you've just got to look at the times, John, as well. You're quite right in terms of what the settlements. I mean, we're sitting, not a settlement for, sort of settlement day really for Forex. So you've seen some quite big push up on the euro and the pound, etc. Don't know what the S&P's doing at the moment. Can't see those right this minute, but we're seeing quite a few adjustments, end of month adjustments there. People may be making a few end of adjustments there, but or as I say, it's different expiries. Okay, oil is very political. What is more sensitive, Brent or Western Texas? West Texas by far is more sensitive. Brent's a bit more. You can put the two, overlay them on the same chart, and you'll see a much more settled Brent. But Brent represents a much smaller volume. Could the June contract, could the June contract also go negative? Possibly. As I said a moment ago, I think the brokers are taking action out there. There's a lot of brokers that I speak to, all doing different things. I think, as I say, XTB take the line of keeping you out of trouble, which is a really good place in terms of moving contracts. So you've got more leeway. There's some support there for it to actually go negative, hopefully. But it possibly there's a lot of volume sitting there. Yeah, James, thank you. You go and clap for the National Health Service. Thank you very much. And I strongly recommend you all go and do that. I'm going to be in trouble for not doing it at the moment. So yes, and what a great subject to just bring up there. Thank you. We should be very appreciative to them at the moment, and all the other people that are involved in keeping the country running, risking things. Haynes, do you know, cheers, John, will do. Haynes, in terms of $6, who knows is the question. I don't know. Do you know, it's sort of, it's in the past I'd have said no way. Now times who knows. You know, when the as I say, the production costs for these countries is so high, and a lot of them $30, $40, and you just think, well, even at a $30 barrel, they're not making a lot of money. There's cost to it all. So I think I'm going to wind it up here, because I will get in trouble if I don't go and show my appreciation out there as well. Hopefully you found this useful. I'm quite happy to do a follow-up at some stage on oil, or look at something else. We'll see how it goes there. Thanks very much for your time, people.